All right. Hey guys, Brad here. We are going to jump right into the charts, Elliott wave style. We are going to look at gold, silver, the Nasdaq, and crude oil, and the dollar. All right, let's start off by diving into the gold chart. And really, what I'm interested in is giving you parameters. So, we believe we've already topped in a more lasting top. Of course, everything is about probabilities. In any case, if you've been following me inside of the club, you know that we tracked this top rather well and got this wonderful drop down, which we traded a lot of. Then it starts to get a little less clear exactly what's going on, but I'm just going to present to you what I think is the clearest, most likely pathway. So we had this bounce, and the challenge is there's two different ways, but both are clear unto themselves as to how to measure this move. You can either measure it as five up, which are the white labels, or it can be a three wave move with this ABC. Both measure well for either case, and that means I don't have as much of an edge as I'd like to have. But then we revert to price action and basic levels that have nothing to do with Elliott wave. That's what these red lines are. By the way, I'm learning this from the professor inside of the Professor Trades Club. That's where you're going to learn very simple and effective ways to look at your supply demand zone or support resistance zones and the psychology of trading. That's Armando's strength. In my room inside of his club, I'm giving you the Elliott wave parameters. So as this came down, it really could be counted as five waves, and you only got wicks down here mostly in this ratio box. So let's just get right to it. What I would be watching and what I will be watching inside of the club is I'll be on the lower time frames looking for this pullback to continue coming down in some kind of a B wave and then give us one more shove higher into this gray box, which let me move this over a little bit so you can clearly see the parameters. 3282 is a very important low. That's this low. So if this low breaks, something else is going on, and we are definitely going to go lower, even if it bounces around in this area. If it breaks this low, it is going to come lower. So my bias is towards the idea that this is a three wave bounce, even though it's problematic that it could be measured as five waves. That gives me pause and should inform your lot sizing, meaning stay small, because this move down, I mean, it looks like five waves to me as well. And then we did have this bounce, and it is getting rejected right at the A wave, 382, which is a typical target for an A wave. So I'm just giving you my logic. If you follow Elliott wave, if you know enough about Elliott wave to make sense out of my words, if this is five down, this is probably just the first leg up. We will not make a new low for a B wave, likely, although that's a clue. If this comes down impulsively and keeps going, obviously, that's price action. That's going to be a humongous clue. But what I'm thinking at the moment, based on these clues, is that this is an A wave bounce. B wave will hold. We'll get one more shove somewhere up in here, somewhere around the 618, but anywhere in this gray box is fine. And guess what? There are no certainties in trading. So is it possible that this came down to here and that this is all the bounce that there is? I mean, yeah, it's possible. Sure. So what I do inside of the club is I drill down on the lower time frames, meaning like the 8-minute time frame or the 3-minute time frame, and I start looking at the internal structure of this move as it comes down, because that's going to be informative. Okay, so that's what I got for gold. So for right now, you want to see this come back, just call it dip below 3,300 and catch support. Doesn't have to come that low, or it could come all the way down into this zone below there. You just don't want to see it make a new low. And then I think reasonable, the 618 is not a bad target. If this holds support and starts reversing and you see price starting to come back up, I think the 618 is a reasonable target. But anything above the 100 is fair game once it bounces and starts coming up, meaning it could reverse anywhere from the 50% fib all the way up. to the 618. And these yellow fibs are what the measurement would be if price comes back down and back tests 3,300, 3,290. And if it dips below it, then I just adjust this level from wherever the low is formed. Let's say the low just stops here, okay, and it starts reversing and coming up, then I'm going to move this up to where the last low was, which is going to move up these yellow fibs. But don't be mistaken, this gray zone is the target zone, and we've already touched the target zone. Okay, moving on to silver now. Actually, before I move on to silver, let me just take a moment and tell you that the professor, inside of the Professor Trades Club, which is where you're going to learn the psychology of trading. When I made my agreement to come and join Armando in his club, I insisted that in order to get my club with the Elliott Wave Room inside of the Professor Trades Club, you can't get into my room unless you're a subscriber of Armando's service. Why? Because his lessons and teaching about psychology and the community that he built, where we're all supporting each other's psychology in terms of lot sizing. Don't let a runner go against you. Take gains. Don't let a winner turn into a loser. Size down, go for smaller gains, but increase your consistency. These are the things that Armando teaches. He's using basic supply and demand levels, and along with all of his years of expertise in identifying reversal areas, just so you can grab pips 80% of the time, 85% of the time inside of his club, following his trade signals. Once you can get your psychology together, if you want to take your trading to the next level and perhaps swing trade more, or not be so focused on the really short-term gains like the scalping gains, that's where Elliott Wave shines. We're going to see a lot of the same levels that Armando sees, but Elliott Wave gives you a wider range of targets based on the way Elliott Wave works. It gives you projections. So whereas there maybe Armando is saying grab points, 20 to 50 pips, there may be a trade, say gold, for example, where we're seeing a $100 move, which is more of a swing trade. So it's different from what Armando's doing, but Armando gives the best foundation that you're going to get. So if you're new to trading and you're watching this video and you've been struggling with consistency, if you've been sizing too big and getting killed, or if you've blown up an account or two accounts and you're about to give up, but you haven't given up yet and you're here watching this video, I implore you, I highly recommend you come in and join the Professor Trades Club, especially now, because he's running the special. He brought it back. He extended it, I should say. So you're going to get any of these plans at half off. So if you come in, the plan that I'm in with the Elliott Wave Room is called the Monthly Plan Plus. So when you click the link, which is in the description of this video, you click the link, you're going to end up on this landing page. You got to scroll down, and whichever one of these two plans you select, you are going to get 50% off your first month. Okay, so, and what you're getting access to here for the money is a ridiculous value anyway. So if you can come in now and get 50% off your first month and really check us out, because after a month, you're going to have enough time in the club to see what's going on in there every day. All right, so the link is in the description of the video. Don't be afraid to come join for half off just to see what's going on. Okay, let's hop back into the analysis. And let's move over to the silver chart. All right, so with silver, we're pretty much looking at a very diagonal looking structure. And it's kind of funny because it gave almost a diagonal here, but it kind of lost it. But then it created another diagonal looking structure here. So I'm going to keep this real simple. If you've been inside of the club, you know I've been looking at this chart for weeks, like for real, several weeks. Haven't changed the parameters either. And what I've been doing inside of the club is I'll scalp between these parameters, and I'll drop down to a much smaller time frame, like a 21-minute or even sometimes an 8-minute chart. And I use very few technicals. I do some volume work, which you can see over here. But here's what I'm getting at with silver. I am long. I've been short, long, short. I have caught. I've been in the right direction largely. There was a couple of times I got stopped out and got dinged. But the way I trade is highly dependent upon my risk management. Risk management is really what the name of trading should be. It's risk management. So in silver, what I do is I stay really small. It's hard to stay small based on the futures contracts that are available, but stay as small as you can in relation to your account size. And so what I'm looking for this week and really the next 2 weeks is bullish resolution. Now, I don't know the future, so it's not like just because I'm saying this, you just go ahead and refinance your house and go long silver. No. But here are some parameters. You really don't want to see this structure break to the downside. But if you do, though, don't fight it, man. Do not think, if you're long and you see price break this structure right here, this upsloping trend line right here, if you see price break that, I don't want you to think, well, I'll just keep buying because I'm going to cost average. This is not the place to cost average. This is a very choppy, triangular looking structure that already has enough waves in place to be considered completed as a triangle, as an Elliott wave triangle. So now it's bouncing off of that last low, which it's already done 4 times. This is the 4th time. So it's had every opportunity to lose this level, and we'll just call it 32.76. 32.76. Do not want to see there. But if it comes down and breaks this level, to me, that's a nail in the coffin for the bulls. 32, just call it 32.58, 32.60. And the reason for that is there was a volume ledge here that has kind of resolved itself with all the buying that's been happening. You can see this volume tool. A lot of buying. These used to be bears, used to dominate this side of the chart, but once it came up after this level over here, the buyers showed up, and they have driven these numbers higher on the buy side, which just means there's been more buyers than sellers. That's all. So to me, that encourages me it supports the view that this chopping range has been allowing traders to accumulate longs in this zone. So now that there's enough waves in place, I'm long again, and this is a swing attempt, but I'm sized for a scalp, but it's a swing attempt, meaning I'm not going to take off. If this comes up early in the week and gets above this high right here, I'm not going to take gains, and I'm going to leave my stop at break even, which is going to be by the time, if price gets to that high up here at 33.43, I'm not going to take gains. I'm going to keep my stop at break even, which is going to be down here around 33. So, and then what I'll do is if this creates, it's probably going to make it up to here before it sees some kind of rejection. And then I'm going to, depending on the structure, I'm going to add to my position, because I'm going, if it can hold this support and make it above this high and then make it up here into this, I expect to see some resistance in this area. But then if it comes back and it doesn't look impulsive to the downside, then I'm likely going to layer into a few more longs, because to me, the 1764 would be a minimum target, 35.19, and a more ideal target would be, just call it 36. Okay, there's a lot of confluence up here there's 2 different fib sets and a ratio box. And if you look over to the left, this is a zone right here. At one point I did have that zone on there, but I took it off. I moved it around. Anyway, the point is, I'm long. You've got your parameters, which is really the last low is a parameter. That's a warning, the last low, and the last high. Those are your 2 parameters, really. But my arrows tell the story. Okay, so that's silver. Let's keep it moving. Let's go look at the Nasdaq, which, oh my goodness, what an instrument. Got to stay small. I've had success this whole year with Nasdaq. Have I gotten trades wrong? Absolutely. What has saved me is sizing, lot sizing. So right now you can see the overall possibility. Either this has topped and that is the high. That is possible for sure. Or this last wave 5, it could be coming up as a 3-wave move, A, B, C. Let's look at a lower time. That's a 4-hour chart. Okay. Now, before I move on the 4-hour, this is kind of what I do when I'm trading. I'll go ahead and find my SAR. So you can see the SAR dots are still on the top. We did catch a juicy amount of that move down. Not all of it. A juicy amount of it, though. And then sometimes I like to look, where's the 200? So look how far down the 200 is. Way down there. Not entirely helpful for my way of trading. I would like price action better and fibs. But I do blink technicals on and off. Okay, so here we are on a 21-minute chart. This is really what I want to show you. Totally possible that it's 5-wave down. Totally possible. Also possible that it's 3-wave down. This is quite the reaction I mean, this is bam. The only thing corrective about it is it came to the 382 and is running, it basically hasn't had a candle close above the 382. Yeah, it's got a few wicks above there, but this is where you would expect an A wave to terminate in a corrective wave. So what we would expect to see in that case, actually, coincidentally, this happens to be similar to gold. I am not correlating this to gold at all. I'm just saying that structurally, it's reminding me of gold in the sense that maybe that's an A wave, maybe that's a B wave, and it could be corrective and still come up to here. Whereas if it is impulsive, and this could be a wave 4 with a wave 5. So in other words, if this comes up and gets a little higher into here and then starts coming down correctively, it is possible that we are on our way up in this last leg that's going to get you closer to 22,300 or more. Okay, there is a zone up there. So one of the ways we're going to do clue hunting is I'm going to use my ratio box because I don't want to waste your time looking right now for the nano stuff. You're going to get that in the club. But for the purposes of this video, if this is a wave 4, and let's just say it terminated right there. And I'm not saying that, by the way. This is just how I do my work with trying to see what is likely, what is most likely. So I don't really see where the wave 2 would be here. 1, 2, but I'm just going to put on a measurement to see. I mean, there's not really a big enough. I mean, dang, I guess that could be the wave 2 way down there. It's totally possible because it did make a lower low. 2176.75, 2176.75. Thanks for being patient and sticking with me. I hope you're learning. I know these videos get long and I talk a lot, but I cannot help but try to teach you this stuff so you can fish for yourself, if you know what I mean, and catch your own fish. So really, this would be wave 4. So what I'm getting at, sorry, what I'm getting at is if price wants to come down, and let's say it's not a B wave, right? The hallmark of a B wave is it typically comes deeper. Certainly deeper than a wave 4. Certainly. Not all the time, but certainly. So what I would say is if this is going to come down more, you're going to look for it to hold in here. If it's going to be truly impulsive, it should not come down. Certainly should not lose this blue zone. So what I'm going to do early in the week, if you're inside the club, you're going to get this information. Early in the week, I'm just going to measure this stuff again. And if it's not going to be a B wave, then this is going to hold. Oops, I put on the wrong ones. It's going to hold somewhere. Ideally, it would be great for bulls if this holds. Okay, this is. I'm sorry. Excuse me. This is backwards. I'm just going to do it the easy way. Right. So, that is where wave 4 would terminate. So, but this can get another little bounce if it doesn't make a new high and just come down a little bit more. And I would consider that back test of this zone. Perfectly realistic. So this is where you could take a long scalp. And then if it breaks here and gets a candle close, get out. Get out. Stay small. Look, it might bounce first, but if it comes down into this box, it is possible this is a wave 4 and you're going to get another shove higher before a slightly larger correction. I'm just going to add the 50% fib. I don't think it should. This is your warning. If it comes down below that 50% fib, and really, if you get a candle close on the 1 hour down below this red zone, that's your warning right there. But if you want to attempt a long scalp, I would do it from here, or I would wait and see how low this can get and do a long scalp from there. Okay, so that's what I got. And if it does at this moment, if I speculate and say that's the low right there that we already had, then this zone up here is a ratio box for where the 5th wave might point to. If this comes down deeper into the zone. I'll just move this down early in the week to wherever that next low is. So at the moment, I'm just going to use this as a placeholder. Okay, so that's your Nasdaq. Now again, if you've made it this far, I'm not going to belabor the point, but I just want to show you guys one more time. We are running a special right now, 50% off the first month. So if you're watching this video and you're getting value, come join us in the room for half price your whole first month. You're going to get everything. If you select the monthly plan plus, you're going to get everything for roughly, what is that? About 18 bucks, 17 or 18 bucks. That way you can really get a taste of Armando's lessons, his psychology. You're going to get a feel for the community because the community is real here. This is not a bunch of strangers. This is nothing like Twitter or nothing like Discord groups that you've been in and all this stuff where it's chaos. This is a highly organized and a room full of experienced traders who are helping each other. It's quite remarkable, actually. So that is my promotion. Now let's go on and finish up our session by looking at two more instruments, starting with crude. Now, crude oil, I've been talking about this for a minute. It's been stuck in this range, so I've been expecting it to be stuck in this range, which is why this zone has been on here, and I put the word sell on it with a number, a numeric value. So if you're a scalper, we've been scalping short from this zone for many weeks now, and it continues. So I happen to be short still. And the idea is that this is some kind of a triangle structure. And if you want to get technical, it should be composed of 5 waves. So right now we're working on this wave, one more low, which is why I started shorting a little early, but I stay small and I kept adding to my shorts. And I posted this in the room that I actually added shorts. I put this box on there before price made it there. This was there. And I told folks I'm going to add some more shorts, which I did at the 618. And my stop would have been above this zone. And now look at what price got rejected from that zone between the 618 and the 764. Price is coming down. So the short-term parameter is, be awesome if it does not make a new high over that last high. Does not make a high over that last high. And what you want to do is you want to see it break the last low. And the first place you want to start watching yourself is this 100 fib. Ideally, it's going to come down, and it could even exceed this, but whatever. I don't know the future. But these are the typical fibs. These yellow fibs are the typical fibs for corrective action. And I don't want to burn your time because I do this in the inside of the club, but I'll give you a little glimpse of how I do this. Let me zoom in. I know a lot of you guys are on phones. Let me just show you how I would measure for this wave. You catch, actually, I have to go down in time frame a little bit just to measure this properly. Forgive me. Just go to the 1 hour. All I want to do is see. Okay, so what I wanted to see here that I couldn't see is I need to see where's the swing low. So it's right there. And then where's the next swing high? It's at 61.72. So I'm going to drag this over 61.72. And then I'm going to go to my template and I'm going to put on the A equals C with extensions. Okay, so now we're going to go back to the 4 hour. And what I often do is the longer term corrective fibs, which are the 100, 1236, and 1382. I'll make that orange so you know it's the longer time frame, and I'll keep the smaller time frame yellow. So it is at this moment, if price does not make a new high above 61.72, then this is a reasonable target zone. And I happen to like the 1236, 382 zone. Now the nano, the smaller degree stuff like I'm showing you is less reliable than the longer time frame stuff. Just as the same thing if you're trading a 5-minute chart versus trading a 4-hour chart, the 5-minute chart is going to be squirrelier. Well, it's the same thing with Elliott wave. When you're measuring the nano stuff, it tends to be less reliable and more squirrely. But anyway, so this is what I'm looking for. Because I'm a little heavier and I'm way in the profit, if it comes up and makes a new high over here, I'm going to start unwinding my shorts, or at least reducing size. My expectation is that it may come back up, but it'll get rejected somewhere in here. And what I'll do is at the 100 fib is where I'll take some gains. At the 1236 is where I'll take some more gains. And if I'm lucky enough to see the 1382, I'll take the rest of the gains. And then I will leave a very small position on, and I'll pick a spot to put a profitable stop on my runner just in case this wants to let go and, forget these fibs and it just wants to come test sort of this rough trend line bottom of this triangle looking structure. So, I already gave you a sneak peek of my daily chart because the context for this triangles exist typically, and this is a teaching moment, triangles typically exist in Elliott wave in the position of where you would expect a B wave or a wave 4. So part of the way we discern what is this wave structure telling me, what wave structure should we expect here? That's context. Like if I know I'm already had a 3-wave move, what kind of a price action am I expecting? Am I expecting a wave 4? Yeah, maybe. Or a B wave? Yeah. So Elliott wave, it's a lot of things to learn and think about, but man, when you put it all together, it really is powerful. So here's what I'm talking about. I have this as 5 down for wave 1, a 3-wave bounce for wave 2. Finished off, this is a diagonal, so it's the wave 3 is in 3 waves. Possible it's not a diagonal, but that's neat. I don't want to get too academic on you, but the point is 1, 2, 3, and what comes after 3? 4. And the way this is chopping is very consistent with what you would expect to find in a wave 4. That is the characteristic of a wave 4 on any instrument of any degree. Is this choppy and overlapping? That is a characteristic of a wave 4. And that's also where a triangle can exist. So based on the fact that this, ever since it made this low back on Wednesday, April 9th, and then it made this high, price has not made any net gains or any net losses since then. It is literally chopping in a range. So when you see this kind of rejection again, it has me thinking triangle. So Elliott wave triangle has 5 waves. So A is already in place, B already in place. This is a daily chart, by the way. C is already in place. So the next obvious idea is that this will come a little bit lower, come down into here for complete the D wave, and then one more shove up for the E wave, which should be the final wave. And just the way this is playing out, this is called a barrier triangle, which means the top level are roughly in the same horizontal resistance. And there happens to be an Elliott wave pivot right there, which I just love how this price is coming right up to the pivot and getting rejected. Okay. And so if it comes down and does not make a new low and then comes back up one more time, and could it make a new high? Yeah, but does not get above this pivot zone. Really, it shouldn't get above 65.50. And then hopefully we will see rejection and we can take a swing short for this 5th wave down, possibly to below 50. Okay, but one step at a time. I just wanted to show you why I'm looking at a triangle, because when you're zoomed in like this, out of context, this just looks like a mess and, what is all this stuff? But when you zoom out on a 4-hour chart or a daily chart in this case, then you get more context. Okay, cool. So last thing, dollar. It's so impactful, has such a influence over so many asset classes. And this is the weekly chart of the dollar, which if you've been following me inside of the club, you already know that this chart, I have not touched it in months and months. And even the B wave, very difficult to track, but I have to say, nailed it. Even nailed the wave 3 top as well. This is the power of Elliott wave on the longer time frames. Gold is the same thing. Very reliable. So the idea is, while gold and silver are getting their extended highs at some point, it would be beautiful if it coincides with the dollar just dropping down one last time, somewhere down in here into the low 90s. Okay, what that looks like on the lower time frame is it did get rejected. I put this zone on here last week sometime and was looking for a rejection there and got it. So, and price is getting rejected again right here. So at this moment, now it could still go either way because this wave 4 could actually be over here. Why? Because this could be an A wave This could be a B wave, and you could get, in other words, you can get an ABC. And anytime you see me, right, if you know me by now and you've been following me long enough, you know when I'm looking for three wave moves, I'm always using yellow or orange fibs, and I'm always using the same fib numbers: 100, 1236, and 1382. So there's a warning. The first warning is it makes a new high over this, I would call this a B wave. If it gets above there, that's a warning. This right here is straight up resistance. If it comes above here, it's definitely going higher to those other zones, I believe. I shouldn't say definitely, that's bad form. I think it becomes much more likely that you're going to see it up here. But for right now, look, it got rejected here and it got rejected here. Now, it did screw up this really nice downside impulse, which is because it got above the pivot convincingly, not by a little bit. So, on that nano scale, this at the moment should come down lower, which could coincide with the metals finishing off, or at least getting a good start to their fifth waves higher. If the dollar can crap out and come down another six units from where it is now, or more, that'd be good for metals, I'm sure. Cool. You guys, thanks a lot for watching. I keep forgetting, man. Hit the like button if you're getting value and you like what you're seeing. Please help me out. Hit the like button and subscribe. Hit the notification bell. I'm gonna be doing these videos back. I've been doing them a little bit less often, but now I'm back on it. So pretty much every Sunday and Wednesday, you'll be seeing some kind of an update from me. Thanks again for watching. The details to how to join the Professor Trade Club are in the description of this video. All right. Thanks again for watching. You guys have a great trading day. And whatever you do, don't get killed trading futures, man. Stay small. All right. Bye.